Welcome to the technical analysis part of the presentation for today. My name is Peter Yusuf, Senior Market Analyst at IronFX. Now, we're going to be mixing once again fundamentals with technicals, and we are going to be placing more weight practically on the US dollar, US stock markets, gold, Euro USD, and should there be some time left, most probably also WTI. Let's make a start with the US dollar index. Sorry. This is the 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. Now let's drill out to the daily chart. You can see that the US dollar index edged lower yesterday, while during today's Asian and European sessions seems to be edging a little bit higher, but nothing convincing actually. It's more like there is a relative stabilization here. So back to the 4-hour chart, readjusting it, you can see that the price action remained below the 102.45 resistance line, definitely within the boundaries of the 101.55 and the 103.05, which tend to set the limits of the current sideways motion, with the mid-level being present at our 102.45. On a fundamental level, we may note that the US consumer confidence, which was released yesterday from the US, was actually pretty much better than expected. And that may have taken the market a little bit by surprise. It was expected to drop, it didn't, it rose, and quite some, which may have prevented the US dollar from actually having substantial losses. That would be one. Also, we tend to maintain the view that market worries about the banking sector, the US banking sector, despite easing somewhat, are still present. I would be noting though that on the other hand, also the markets may bear in mind that we still have a rather indecisive Fed, in our opinion, which may actually also inflate market expectations that the bank may limit or pause its rate hiking path after the next meeting. So that's another issue which could be weighing a little bit on the USD. And in general, we may say that there is a very, very liquid situation surrounding the US dollar, both on a monetary level and fundamental level, macroeconomic level. Also, that's being reflected on a technical level as well. So for the time being, we tend to maintain our bias for the sideways motion to be maintained. Should we see some intensification of the market worries, we may see some safe haven inflows once again feeding USD bulls. And in that case, we may see the index rising, breaking above the 102.45, start aiming for the 103.05. On the other hand, though, I would be noting that the RSI indicator rose a little bit, but remained below the reading of 50. It's actually right now at 44.9. And okay, it's not a bearish signal, but definitely the bulls did not take over, at least not yet. So I wouldn't be surprised the index to remain in a sideways motion for now, yet some bearish tendencies may be present. Should that be the case and we may see them intensifying, we may see a reversion of the price action of the index starting to drop, aiming if not breaking the 101.55 support line in search of lower grounds. It's characteristic how the level, the S1, was tested here, but also here, and to the upside here, while the S2 was tested here. It was a beautiful throw where practically the downward motion was halted and reversed. It's very, very indicative. On the flip side, we have mentioned, should the bulls take over, would expect a clear break of the 102.45 and the price action to reach as high as the 103.05, a level which was aimed for here, tested here, and here. Okay, let's move now to your stock markets. Making a start with Dow Jones. You can see that there was a nice upward movement breaking above the 32,500. But if we drill to the daily chart, you can see that there is a slight red candlestick here, implying some bearish tendencies. But it proved to be a mere correction, and the price action moved higher, breaking above, back to the forward chart, the 32,500. Now, on a fundamental level, we note that despite some hesitation being present among equity markets traders to actually buy, it seems that it has been overcome. Once again, though, there seems to be still some market worries about the US banking sector, but they're easing, and definitely Fed Board Governor Barr's comments, actual testimony yesterday, may have helped to that end, to ease the market worries. It was characteristic that Fed Board Governor Barr stated before the Senate that the SVB fallout was mostly due to mismanagement of the company, and that was also implying that it was not a systemic issue, but the particular problems of the particular bank. So that tends to clear or provide a green light for the other banks. He also stated that the banking system in the US is strong and resilient. So that was another positive comment, which may have helped also the market sentiment to reject the words and start correcting higher, with the result being that during today's Asian European session moved above the 32,500. On technical level, we have to correct the S1, the R1, and turn it into an S1. And we have to go hunting for a new ultimate resistance line. Let's unlock the chart. Okay, there's a peak here, but in my opinion, that's not decisive. It was very quickly moved back. I would go further back. Here you have it. This is a far more decisive movement. You can see how the price action was on the rise, hit the ceiling at this point, this level. That would be the red. $32,500. Yep, at the 32,500. So it hit the ceiling here and started correcting all the way down. It was a substantial drop of around 2,000 points. Okay, it was definitely over a period of time, but it's very, very clear, very, very intense. Let's readjust the chart, reposition and correct the levels. 35,500 being the new ultimate resistance line. Repositioning the levels for the beginning for starters. Starting with the S3, which is now being placed at 30,980. The S2, which is being placed at 31,700. Sorry, that would be 730. The S1 at 32,500. The R1 at 33,500. The R2 at 34,400. And the R3 at 35,500, as we have mentioned before. Locking everything in. So what's the story here? Let's talk direction. Now we see that there is a clear upward movement, and the correction lower, this one, allows us to actually draw an upward trend line. It's quite fresh, but the fact that the price action hit the ceiling at the 32,500, corrected lower, yet found the strength once again to pull up, break above the S1, the R1 now turn to support, and continue higher tends to imply a bullish sentiment. That's also supported by the idea that the RSI indicator is on the rise after hitting on the level of 50. It's actually right now at 61.4 and still rising. So that may also imply that a bullish sentiment is building up, which may allow more or less US stock markets to start aiming for the first resistance line, the R1 33,500. Please note that we expect most probably an intensification of the market's reaction at the American Open later today. And I wouldn't be surprised to see the price action starting to aim, if not reach, even the R1. It's a substantial rise. On the other hand, though, markets may also reverse the current price action, in which case we may see the price action dropping, breaking the upward trend line, breaking the 32,500, and start aiming for the 31,730. A possible stabilization is also in the cards. It's a possibility. And in that case, I would expect the price action to remain just above the S1. Yet I would require it to break the upward trend line, which we have just drawn, and at the same time respect this one. So it would be movement like this, maybe even a little bit more intense. But definitely we need a break of the upward trend line as a signal that the upward movement has been interrupted. Okay, moving now to Nasdaq. The index dropped and remained below the 12,760. That prompts us practically to switch the the support line into a resistance line. I would be setting this as the next support line. Note the double hit once, twice, 3 times. Sorry. That would be in green, 11,830. Let's readjust the labels. The R3, which is now being placed at 13,700, sorry, 13,400. The R2 at 13,145. The R1 at 12,760. The S1 at 12,450. The S2 at 12,220. Sorry. And the S3 at 11,830. Locking everything in. For the time being, we tend to maintain our bias for the sideways motion to continue. Given that the RSI indicator has broken slightly above the reading of 50 and is on the rise, that may imply a slight buildup of bullish tendencies on technical level. Given also that there seems to be a more risk-oriented approach, at least during the early European session today, that may allow the bulls to take a decisive step and push Nasdaq higher than the R1 12,760, starting to aim for the 13,145. So it's a big issue here. Should the R1 be clearly be broken, then I would expect a bullish sentiment to overtake and actually push Nasdaq higher. Speaking of fundamental level and market sentiment, the headlines yesterday were quite interesting about Alibaba. It seems that the company has broken its operations into 6 independent entities, and that tended to more or less showcase the strength of the Chinese government, actually of the Communist Party, over businesses. I think that it may be also implying that the Chinese authorities crack down on high-tech companies, Chinese high-tech companies, may be nearing its end. I think Alibaba may have been an example which was now given to the markets to watch their step and to entrepreneurs, which allowed also Jack Ma to resurface practically. So I would like to see it in a wider context. It's not the breaking up of the company's operations as such, but also what the possible effect could be on a wider scale for Chinese tech companies in China. In my opinion, it's understandable the fact that Alibaba share price jumped yesterday. There was a rise of around 10%, if I'm correct. And I wouldn't be surprised this movement to actually provide a slight boost to the market's confidence. On the other hand, though, we have to note that should we see US yields being on the rise, we may see the tech sector suffering a little bit as it is more sensitive. And should the bears take a fair chance, we may see them reversing Nasdaq's direction. Yet we would require a lower true than this one. So practically it would have to break below the 12,450, or at least a lower true than this one, which once again would drive the Nasdaq lower towards this one, maybe even breaching it. Should the bulls take over, we may see the price action of Nasdaq rising above the R1 12,760 and start aiming for the R2 13,145. It's a very, very interesting trading instrument right now, and I think it deserves some more attention. And I can see from your comments that you would also like to see S&P 500. Okay, allow me to create it. Give me a sec, please. So I'm choosing US 500 cash. Let's also load up the template to make things more visible. Forward chart. Zooming in a little bit. Okay, we have a quite interesting chart here. It's a very wide sideways motion, but let's set some resistance support lines. And let's set also the parameters that is going to be a little bit more discreet. Okay. So we have one support line here. I would be noting this level as well. And the most recent show could be here. Double touch here and here. And this one here. We have to note though that there is also a very, very wide distance between the second and third support line. So I would be narrowing it all the way to here. Catching this show here. Practically that would allow me to set a fourth support line here. As for resistance lines, definitely a peak here would be interesting. In red. The second level would be, in my opinion, here. We have more touches here and here. And I would be setting a level here. These touches. And even higher, the fourth one here. It's a very, very interesting chart. Okay, let's set the labels as well. The third resistance line is going to be placed at 4,135. The second resistance line to be placed at 4,080. The third level, sorry, the first support resistance level to be set at 4020. 'Let's set also the support lines, making a start with the S1 at 3950, 55 maybe. Let's have a look. Yeah, 3955. $3,910 being the second support line. The final level being at, sorry, my bad, 3,865. Okay, so here we have it. Note that there was a nice upward trend line. You can see it here. If that was interrupted, and it's characteristic that despite having a series of consecutive higher peaks and higher troughs, the peak part especially failed to make a higher peak than this one. Actually, the next one was lower and even lower. But there was some turmoil on the troughs as well. So I would be switching initially in the long-term view, especially if we drill to the daily chart, should be more obvious. Yeah. My upward bias in favor of a sideways motion. Back to the 4-hour chart. There is a catch though, and this is interesting as how the whole picture between the daily and the 4-hour chart changes. Now we have some rather decisive market movement over the past 16 hours. 1, 2, 3, 4. 4 candlesticks, 4 clear-cut green candlesticks in a row. Note how also the RSI indicator is rising. It has reached now the reading of 60.7. So there is a bullish sentiment in the market for the index. I would though feel much more comfortable in a bullish outlook should the price action break above the R1 40,020, this level. Why? Because it has provided resistance once, twice, tested here as well 3 times. So it's pretty valid. Should that be broken, then yes, we may be able also to draw an upward trend line and see the limitations of the upward movement. Note should there be any corrections lower, but that would be a substantial factor to switch from a sideways bias towards a bullish outlook. On the flip side, should the bears take over, we may see the price action of gold reversing direction, breaking the S1 3,955, and that would allow it to start aiming for 3,910. For the time being, though, we maintain a bias for sideways motion to continue between the R1 4020 and the S1 3955. Okay, let's have a look also at gold. This is the forward chart. It's clearly above the reading of 1960. Let's have a look at the daily chart though. Despite the rise yesterday, you see that gold's price is correcting today lower. We will have to, let's drill back to the forward chart, we will have to switch though the role of the R1 into a support line. Given that the price action is still above it. Let's go hunting for a new ultimate resistance line. Beautiful peak here. In red, that would be the 2060. Let's turn to 75. Okay, 70. If I'm correct, this should be also an all-time high. Okay, not an all-time high, but the most recent high. And that was in summer of 2020. To be more exact, it was tested on the 7th of August 2020. Okay, readjusting the chart. Back to the forward chart, sorry. Let's readjust the levels as well. Starting with the S3, which is now being placed sorry, at 1895. The S2 at 1928. The S1 at 1960. The R1 at 1994. The R2 at 2021. And the R3 at 2070. I know it's a little bit off, or if you prefer, the distance between the R2 and the R3 is a little bit wide. But I truly believe that should the R2 be broken, then the next possible stop is the limit, the previous record high. For the time being, we tend to maintain a bias for a sideways motion to continue. Note how price action of gold has been revolving around the reading of the 1960 level. Also, the RSI indicator seems to be currently running along the reading of 50, implying a rather indecisive market. So I would expect the sideways motion to continue for now. For a bullish outlook, I would require a rise of the price action of gold, a clear break of the R1 1994, and the price action to start aiming for the R2 20,020. On the other hand, should the bears take over, we may see a drop of the S1 1960 and the precious metals price to start aiming for the S2 1928. Actually, I would require a clear breach of it. I would like to see it here, if not even a little bit lower, to be able to draw a downward trend line. Let's move now to Euro USD. Now we can see that there is an upward movement still, but there seems to be some hesitation as well. At this point, we should note that Germany's consumer confidence for April and France's consumer confidence for March tended to be a little bit lukewarm. They didn't affect the euro widely. Let's have a look, by the way, drilling out to the minute chart. Let's have a look at what the market reaction was at the release. This was at 9 o'clock. Some slight support for the euro, which was quickly overtaken by the bears. And this is the second, which practically allowed the upward motion to continue for a couple of minutes. There seems to be an upward, clear-cut upward tendency over the past 1 hour. So that's interesting. Seems that the Euro bulls are taking over for now and could lead it higher. Let's go to the 4-hour chart and see where it can go. Readjusting it. Okay, that allows practically the upward momentum to be continued. Okay, given that we have also some corrections lower, which allow us to draw an upward trend line, given also the fact that the RSI indicator, despite correcting lower, rose once again, is currently at 64, there seems to be ground for a bullish outlook for the pair. On a fundamental level, the situation in Europe remains, in our opinion, worrisome. It's characteristic that we had the wide protests in France, which are also quite violent. I would be also adding to that the strikes in Germany, which have paralyzed the country for a moment too. So there is considerable uncertainty on a fundamental level regarding the Eurozone. It's not overwhelming, but it's still something which we should keep an eye out. That's one. On a monetary policy level, I would expect that ECB's easing of its aggressive hawkish stance could weigh somewhat on the euro, which is a little bit of an issue. On the other hand, though, we have to note here that we had also the recent scandal and the raids in the price offices of a number of French banks, systemic banks, and we're talking about Societe Generale, for example, or BNP Paribas or HSBC. So that's another big issue. I know it's not much, but given that we had already some jitters about the banking sector in Europe, everything becomes of high importance right now regarding the banking sector. So, should we see some bullish tendencies being maintained, we may see Euro USD starting to aim, if not even breach, the 1.0925. On the other hand, should the bears take over, I would expect the price action to drop, breaking the upward trend line we have just drawn. But for a bearish outlook, I would also require clear breaking of the S1 1.0760, which would allow us to say exactly that the bears may have been taken over, given that, okay, not only did the price action break the upward trend line, meaning that the upward movement was interrupted, hence the direction was changed, but also it has taken a downturn. That could be signaled by, okay, in our opinion, primarily breaking the 1.0760. Quite interesting. On the flip side, should the price action stabilize, which is a scenario we cannot exclude, I would expect the price action to break the upward trend line as a first signal of a change of trend, but remain well between the R1 and the S1. For the time being, we note that the RSI indicator has started to rise once again and could be implying that some bullish tendencies in the market sentiment seem to be building up, which may drive the price action higher. It's going to be interesting. We still have 5 minutes, so let's go through a couple of FX pairs. I would be starting with GBP USD. Interestingly enough, our prognosis that the price action may hit double top and start dropping was not, I repeat, was not realized. So we have to have a second look at the chart. Let's clear it first. And interestingly enough, an upward trend line is being formed. You can see it right here. Note how the corrections lower allowed the upward trend line to be verified. And we have 1, 2, 3 major corrections lower. Let's readjust also the chart. Note how the upper Bollinger Band, or if you prefer, the distance between the upper Bollinger and lower Bollinger Bands has started to widen. The RSI indicator tends to remain rather high. It's not overwhelmingly high, but still pretty high. It's currently at 60. Let's have a look. Yeah, 60.1.2. It's at 64. Sorry. So it's at 64 right now, which, yeah, seems to implying also that the bullish sentiment may start being on the rise. Should the bulls take over, I wouldn't be surprised to see the price action being a little bit more decisive regarding its upward movement, in which case we may see it breaking the R1 1.2435, a scenario which could pave the way for cable to reach 1.2590. On the other hand, should the price action remain rather stable, we may see it remaining between the R1 and the S1, but the first signal of a change of trend would be a breaking of the upward trend line. Last but not least, should the bears take over, we may see the price action dropping, breaking the upward trend line we have just mentioned, once again signaling that the upward movement has been ended. And definitely for a bearish outlook, we would require the price action of cable to drop, breaking also the S1 1.2265 clearly, and start aiming for the 1.2105. Let's correct a little bit the labels here. Let's move to USDJPY. We still got a couple of minutes left. Very, very nice chart. Note how the price action has broken the downward trend line guiding it and seems to remain in a sideways motion. Between the 132.55 and the 130.40. The RSI indicator has risen for a period above the reading of 50, yet now is correcting lower, aiming again at the reading of 50, which may more or less imply that the sideways motion is to continue. See how the Bollinger Bands have narrowed, implying low volatility for the pair, despite a slight widening during today's Asian session. Should the bulls take over, I would expect the price action of USDJPY to rise, break the 132.55 and start aiming for higher grounds, 135.50. That would be something like this. While should the bears take over, we would require the pair for a bearish outlook to break the 130.40 support line and start aiming for the 128 support level. Also note how valid these levels are. Note what support was provided here, but also here and to the upside here. So the S1 was tested on both the upside as well to the downside, proving its worth and should not be taken lightly. So that should sum it up from all of us here at IronFX. Best wishes for solid trading.
Today, we will look at debt-based investments and their difference from stocks. While as a trader, you can trade stocks via CFDs without actually owning the underlying instrument, an investor will invest in the actual stock and own it. Most investors focus on investments that aim to increase wealth and to help them reach their financial goals, like a comfortable retirement or the ability to pay for their children's education. When investors buy stocks, they purchase assets whose value is expected to increase and provide a nice return when sold. Investing in stocks also allows the owner to access a portion of the company's profits through dividends, share buybacks, or reinvestment, which helps to grow the company's and the stock's value. The stock market offers volatile returns over short periods of time, such as 5 years or less, but high returns over decades-long time periods. Debt investment can be government, corporate, and municipal bonds, as well as real estate investments, peer-to-peer lending, and personal loans such as mortgages. With a debt-based investment, you do not own an asset or a company, but instead you lend money to an individual, corporation, or government in exchange for a fixed income in return. Such investments typically offer a lower return than stocks, but are considered to be more consistent. There is some risk involved, as you might not be able to receive the funds you have loaned, and it's so important to choose your investments wisely. While they might be less risky and volatile than equity investments, they offer lower returns. The bond and mortgage market has fewer price changes than stocks. Equity investments, such as stocks, are securities that allow investors to have a claim on the earnings and assets of the corporation. Common stock trader on popular stock exchanges is the most popular equity investment. The stock market is very volatile, with rapid changes in share values. These fluctuations are usually related to political, social, or other issues in the home country of the corporation. Equity investments are famous for high risks and potentially higher rewards. It is traditionally recommended to investors that they hold both equities and debt-based investment for better diversification of their portfolio. Debt-based investments perform differently than stocks and increase during years of large stock declines. An individual's exact allocation is dependent on the investor goals, risk preferences, and investment time horizon. When it comes to trading, it is important to understand that all trading comes with risk. Depending on your trading goals, you can choose what suits you the best. You can always tailor your trading actions to match your objectives and risk tolerance. Thank you for watching.
Okay, welcome everyone to today's session. Today's session, we're going to touch on Fibonacci confluence, right? Particularly the Fibonacci confluence trading strategy. As the name suggests, right, confluence means there's not only one level there, but there are multiple Fibonacci levels that line up exactly there, right, to create a high probability reversal zone. Okay. Now, as usual, remember, if you have questions, don't hesitate to ask it anytime throughout the webinar. Right, I'll do my best to get to them, right? And of course, to begin, right, risk warning. Remember that everything in this webinar is educational in nature, so please do your own little due diligence before you guys trade. Nothing should be construed as investment or trading advice. Okay. Now, so for those of you guys who do not know who I am, my name is Desmond Leong. I run the award-winning research firm Everest Fortune Group, also Forex Army, right? I'm finalist for the best FX and best equity research in 2019, 2020, and 2021, right? So recently been taking a couple of prop firm tests too, right? I think my Forex funds is the most recent one that we passed, right? And yeah, it's today's webinar will focus on the Fibonacci confluence trading strategy and how I actually use it. All right, it's a reversal strategy. Okay, it's a reversal strategy, so it works really well when in overbought and oversold situations. But you do need to have a lot more confidence when you use it, right? Meaning that it's usually against the market. So if I have my pen over here, right? And my pen over here, usually when you're taking a reversal trade, the market is going against you, right? It touches and then it reverses. This is what we call a reversal kind of contrarian style of trading. It's slightly different, right? So it's not the usual breakout trading. So most people are comfortable with a breakout trading, means that price breaks out and they play all the way down, right? This is because when price is dropping very strongly, you feel a little bit more comfortable trading the direction of price, right? But the Fibonacci confluence trading strategy is slightly different, right? It actually plays the reversal, right? It actually plays the reversal. That means you need to have a little bit more tolerance for risk, right? Especially when you see prices coming down and then you choose to play in the opposite direction. Okay, it's a lot scarier, right? But it can also be a lot more rewarding because you can get a pretty good risk to reward. Okay, now let's begin today's session. Right, I'll be touching on a couple of things here. Questions, remember to feel free to send it through directly to me. Send it in the Q&A part. I'll do my best to answer them. Okay, let's begin today's session. Okay, So let's first touch on ideal market structure. Okay, ideal market structure, right? So this is the part where okay, there you go. When you're trading Fibonacci, right? When you're trading Fibonacci, right? One of the things that you want to do is you want to look for ideal market structure, right? You don't want a market that is too it's like too messy, right? You want to look for the markets where there are very, very clear movements, right? And this is what I mean by that, right? You need the markets with very, very clear movements. You want to look for the big movements. You don't want to look for the small movements like this. Okay. Now, let's of course move on from here, right? There are two things that you need to take note of when it comes to drawing Fibonacci, which forms the basis of our entire trading strategy, right? When you draw Fibonacci, you'll notice that there's this line, there's this dotted line that goes all the way through when you're drawing it. This dotted line needs to follow price as closely as possible, right? It needs to follow price as closely as possible to be profitable, no, to be accurate and relevant, right? So in this example, when price is like moving in this direction, the Fibonacci retracement is not very effective because price tends to deviate quite far. Price tends to deviate quite far from the dotted line. You compare that with this. When you draw a Fibonacci retracement like this, from here to here, you notice how nicely price follows it, right? Even from here to here is okay, right? It deviates just a little bit. In these kind of situations, the Fibonacci is a lot more effective because it follows price more accurately. Okay, so that's the first two things that you need to take note of about the market structure. Okay, that's the first two things you need to think about when you're drawing Fibonacci retracements. Your retracement should ideally follow prices price structure as closely as possible, because only then will it be can you get an accurate Fibonacci retracement. So I just need to drink a bit. My throat, oh shucks, my throat is hurting a bit, so I do excuse me if I take a couple of sips here and there. And of course, when I accidentally spill it on my mouse, oh god, just give me a second. Okay, now let's continue, right? So this is the correct way. Now, a Fibonacci, let me explain to you what's a Fibonacci retracement, a Fibonacci extension, a Fibonacci expansion, and a Fibonacci projection. Okay, there are four different things, and they are used differently. So if you know how to use them, that actually unlocks the secret to trading. If you ask me personally, right, unlocks the secret to trading if you know how to use this properly. Okay. So for example, Fibonacci retracement, you only pick 1 point and you pick a second point. Okay, when you pick 2 points, you then be able to your starting point and your ending point. You're trying to see how far price will then retrace upwards. Okay, so you tend to have a few traditional 23%, right? 38%, 50%, 61. This basically means like how far you're retracing. If you retrace 50% of the entire move, that means if the total drop was 100 pips, right, and you retrace 50% of the move, it means that it's a 50 pip, price has moved back up by 50 pips. Okay, so that is basically what it means by Fibonacci retracement, right? 23, 38, 50, 61, all these different numbers, it basically is simply, right, the percentage of the move, right? So if price comes down and drop all the way here, if it bounces up by 50%, it basically means that it has retraced 50 pips, right? Assuming the drop is 100 pips. And if it retraces more than that, right, this is the 61, this is the 78, right? It basically means how much of the original movement it is recovering from. Okay, now the next thing we do is Fibonacci projection. Fibonacci projection is a little bit more complicated, but it basically means you see the starting point here and the middle point. Okay, you are taking the distance of the starting point to the middle point, right? You're taking the distance, like let's just say the distance is 100 pips, right? And you are projecting it onto here, which is another 100 pips, right? So that is what it means by 100% Fibonacci projection. Okay, it means that you're looking for price to touch and then bounce from there. Okay, we are looking for price to touch and then bounce from there. So that is basically what a Fibonacci projection means, right? I'm going to erase it over here. I'm going to draw it again for you. Very simply, Fibonacci projection means that you're taking the distance from, if you have a movement like this, you're taking this movement. It could be 100 pips, and you're projecting it over here, maybe another 100 pips. This is what I mean by a 100% Fibonacci projection over here, right? So we have stuff like the 100%, we have the 61% projection, we got the 78% projection. All of it basically means that, you're taking the distance and you're multiplying it by 61, 78, or 100, right? When you're forecasting when the reversal is going to happen. That is the meaning of Fibonacci projection. Now let's talk about Fibonacci expansion. It kind of looks like the same thing, but you only have one starting point and one ending point. Price must minimally retrace at least 50%, minimally 50%. So if it retraces to 61 or 78, it's fine. What then happens is that you forecast price to go up to reverse off the negative 27% level, right? And you can see that has happened very nicely over here, right? So this is the trick to Fibonacci expansion, right? You are literally just forecasting when price is going to reverse, okay? You're literally just forecasting when price is going to reverse right here. Okay, it's a very, very important rule too, right? Because it is one of the few market leading indicators out there, right? It's one of the few market leading indicators to help you like forecast at what point in the future is price going to reverse. Very few other indicators are able to do that. Okay, guys? Now the last one I'll talk about is called Fibonacci extension, right? So Fibonacci extension, I call it like a Nike tick. You have your starting point of your Fibonacci retracement here and your ending point over here. It will then retrace two key levels, 127 and 161.8. Those are the important Fibonacci levels that you need to refer to. Okay, and once you rise up, right? Once you rise up to the 127 and 161, what happens is that price tends to reverse from that level. Okay, so that is what we call a Nike tick. Nike tick is very, very straightforward. It's a very, very straightforward setup, right? And you're looking to play the reversal from the 127% or the 161.8%. I'll be showing you some examples of this later. But the key thing here is that we have looked at Fibonacci retracement, extension, projection, and extend. The four Fibonacci, four types of Fibonacci. How we're going to use that is this concept called confluence. Okay, it's this concept called confluence, right? So as you can see, we can start with the Fibonacci projection, 100%. We can start the Fibonacci retracement, expansion, extension, and we found 1, 2, 3 reasons why price might bounce off this area. So this is the meaning of confluence, right? You line all of them up together, it creates a nice area. And what happens is that when price tests that level, tests the area, it tends to reverse very nicely, right? Because you have not only 1, but you have 2 and 3 reasons why price might bounce from that level. Okay, so that is the concept of Fibonacci confluence, right? You don't just trade it you don't just use a single Fibonacci to trade it. You combine multiple of them together to be able to execute the trade, right? Usually it's a reversal trade. Okay, guys. Now let's look at some examples, right? So we take some time to look at a couple of examples on using Fibonacci confluence. Okay. Just let me, I probably need to turn off my video over here just so that it doesn't mess with the charts. Sorry, just let me load this. Let me just make a copy, right? Okay, let me show you some examples of Fibonacci confluence. We try to look for them together. Oh, sorry. We try to look for them together, okay? So I usually have my Fibonacci retracements when I draw it. I have this thing, all the different Fibonacci levels over there. When I use all fibs, okay? When I use all fibs, it actually shows me everything. So over here, the middle part is what I call Fibonacci retracement. And once it retraces beyond the 100%, this is what we call Fibonacci extension, EXT. And if it comes down here and it comes further down, this is what we call Fibonacci expansion. Okay, these are the three types of Fibonacci, right? We got the retracement, we got the extension, and we got the expansion. And these three will actually unlock a lot of the key secrets, so how you can call reversals. Okay, let's take a look at some examples. We're looking at euro dollar now. Actually, let's look at pound dollar. When you draw a Fibonacci here to here, what do you notice, right? I'm just going to highlight one key level, 127%. You would notice I'm going to do a bar replay feature over here, right? That price actually went all the way up, right? Price went all the way down. It went all the way up. It touched the 127% and it retraced back to the 100%. This is a very, very good trading strategy, which I use by myself, right? I use myself and I reached a decent amount of profit, right? I see if I have the picture over here, right? But basically, just let me see if I have it. There you go. You know, it's a good 8% that we made over here already. So as you can see, let's do a save as a detailed report. Yep, detailed report. There you go, right? Yeah, basically it's a good amount of trades that you see over here, right? You got about 8% profit, right? With a 2% drawdown. It's enough to 2.7% drawdown, 80% win rate for short position, 50% win rate for long positions, right? Right. Most of our trades were profitable, 65%. So it's a nice 65% hit rate, right? Pretty good risk reward. Like average profit is 1147, average loss is 920. So you know, managed to make pretty good, decent money with this setup. Okay. Now it is the setups I took was purely from here, right? We take the reversal of the 127 and play it down to the 100%. Okay. Now the success of this strategy lies in confluence. Sorry, just give me a second. The success of this strategy lies in confluence. Okay, what I mean by confluence? In this particular setup, right? If I were to do a bar replay feature, so I think it was a 4-hour chart. Right, in this particular setup, when we did the Fibonacci retracement, Fibonacci extension, I noticed there's a 127 over here. The 127 also happened to line up with this swing high resistance. Okay, this multiple swing high resistance, meaning that I have 127, I got one swing high, I got two swing high. So it's a high enough chance, you know, we got one, we got two, we got three reasons why price might touch this level and reverse. Okay, we got three reasons why price might touch this level and reverse. And true enough, from there, right, let's go bar by bar. Right, price actually comes up here, touches this level, and reverses very nicely. You can see it reversed and it reached our 100%. So this is what I call the Nike tick strategy. Right, you're really just looking to play the reversal of 127 all the way down to 100. How you can improve this strategy is one of it, of course, having a very clear Nike tick, right? Very clear V that you're looking for. The other is when you combine it with support and resistance. In this case, we got swing high, right? Price reacted once, reacted twice. When price finally came up again, it was going to react again. So there were 3 reasons why price was going to drop. Okay, combine that at 127% extension, the Nike tick kind of Fibonacci extension, you got even higher probability trading strategy. Okay. Now, of course, you can combine it with different forms of Fibonacci. Let's try to see if I can find any over here. Let's see. I'm trying to find one with a little bit of a Fibonacci projection too. Let me see if I can find a good example with one with a Fibonacci projection. Okay, this is one example. This is one example over here. So let me just make sure I get this right. So as you can see over here, right, very nice Fibonacci extension. This is a nice little Nike tick that you're looking at, right? You can see it's a very, very nice Nike tick. And it comes all the way up to here, this 127. Okay, I'm going to leave this 127% over here. Because at the same time, there's a very nice Fibonacci expansion, right? Remember the rule for Fibonacci expansion. The rule for Fibonacci expansion is that price needs to minimally retrace 50% of the entire move, right, before it can consider a bounce, right? So we got over here 1 to 7 and negative 27. So what we call a confluence area. This is a confluence area. Okay, so what then happens is that we wait for price to reverse from this level and play the move down all the way down to here. This would be where we play the reversal from and until. Okay, so here we go, right? So we can see price, bar by bar, it starts to reverse, There we go. And price will have hit our take profit then. Okay. It's a simple enough reversal that you're looking for, but you notice that I will not trade based on the 127 alone. I mean, based on 127 over here, right, a zigzag Nike tick, right, 127 is already pretty strong, right? But if you throw in this Fibonacci expansion with a negative 27 up here, them combined, right, actually causes, it gives you much more higher probability setup, okay? Now, if you really want to really improve your probability of you getting a good trade, I believe you could throw in a little bit of RSI. Because you can see over here for the RSI, right, when price was starting to do the reversal at the key level, right, it was a bearish divergence. And bearish divergence is when the price, the highs of the price is going higher, means it's climbing, right? And in this case, stochastic RSI is going down. So in this example, right, it's a bearish divergence, right? We have not only the 127, we have not only the negative 27, right? We also have a bearish divergence versus stochastic, no, versus RSI. So that gives you a good probability that price is gonna drop. Okay. Okay, I see a couple more people over here, right? Let's see, Mr. John, right? Yosef, right? Damir, Mr. Damir, are you around? I just want to make sure that you can hear me clearly, right? If you can hear me clearly, feel free to send a message in the chat, all right, Mr. Damir, right? Okay, let's continue today's session, right? So this is an example of finding Fibonacci a Fibonacci expansion along with a Fibonacci extension. So this is expansion plus extension plus um, divergence. Okay. All three of it lining up very nicely to call this reversal over here. Okay. Let me try to look for a couple more examples. Right. So we got Kiwi dollar. Okay, there we go. This example, I should be able to show you a little bit more confluence over here. So I tend to look out I tend to use the Fibonacci extension as the leading indicator of what might happen. So the Fibonacci extension usually works when you start to spot a letter V. Whether it's a V or inverse letter V, the moment you see it, right, it is time for you to start mapping out your Fibonacci extension, right? So the moment I notice this letter V over here, whether it's an inverse V, I start drawing a Fibonacci retracement from one place to another place. Okay, now that it's over here, what I then do is I will highlight the 127% Fibonacci extension over here. Okay, so we're looking for the reversal of a price to come all the way down to here, touch this 127 and come back up to the 100%. Okay, it sounds like a simple enough setup, but if you get it wrong, it can be very dangerous. Okay, so 127 over there. Okay, let's see how price actually panned out. Bar by bar, you can see it go down, go down, go down, go down, go down. It touched the entry, right? And it bounced back up to the 100%. It might even bounce before that, but yeah, it bounced up to the 100%, right? You see it come down, touch the 127, then it do a small little nice bounce. So this move is all you need to make money, right? You don't care about what happens after that, but this move is all you need to make money. Okay, yeah, so that's another example of using the 127 Fibonacci extension, right? I'm going to try to find an example for you where there's a Fibonacci projection. Okay, we got another example over here. Okay, in this example, right, we can see that price is starting to create a nice little ladder V, right? As you can see over here, right? It's starting to rise up nicely and it's starting to reverse. Okay, we look at the 127% extension over here and we're like, okay, looks interesting. I then do a Fibonacci projection with this as the top, the middle, the ending point. What we then notice, right, I'm just going to remove everything and leave the 127 over there, is that there is a 127 and there's a 78.6 Fibonacci projection, right? So it's all lining up over here, this area over here. That means my pending order will be in this region, okay? What happens when it's like this, right? We can see, let's show you. Price pass, touches that level, and it bounces back up, right? So you have been able to play this little bounce here, making you a fair bit of money, right? So it's all about finding the extension level and combining it with like other forms of technical analysis. You can use the Fibonacci projection, you can use a Fibonacci expansion, and you can use a Fibonacci retracement. So if you were to use a Fibonacci retracement in this circumstance, let me see if it works out. Usually it's a lot harder. Yes, usually a lot harder. Yeah, okay. We'll leave that out. Okay, so that is a great example of using Fibonacci extension with Fibonacci projection, right? I'm going to go through a couple more examples, guys. If you have questions, please ask them, right? Don't hesitate to ask them, all right? Try and find a few other good examples of Fibonacci. There we go, right? This is another really, really nice example, which might just line up with a bigger retracement story. Nope, right? But it might line up on the shorter term time frame. Let me see. You can see that price actually goes all the way down over here, and it's starting to form a nice little Nike tick, right? And it actually comes all the way here, touch the 127, right? And then reverse back down to the 100%. Okay, so this is another example of using a Fibonacci extension. The trick, guys, is really in finding the tick. It's not easy to find the tick, but once you find the tick, you know, you're a lot trading is a lot easier for you, right? The trick is really in finding the tick. Let me see, even in such a situation, can you find a tick? Yes, you can, right? And if you can find the tick, you probably can find the extension. Okay, you can find that. Okay, let me show you another example, a really, really good example. Okay. We can see price over here, right? It looks like it's going to form a nice little reverse Nike tick. Okay, so we take a Fibonacci retracement. We start from the bottom here and to the top. Okay, we got a nice 127% Fibonacci extension about there. At the same time, you know, you have a nice little Fibonacci expansion. Price goes down, retraces minimally 50%, right? But it doesn't kill you off completely. You know, so here we go. Retrace minimally 50%. In this case, it retraces all the way up to here. Then looking for the move down. Okay, so here we go. Here, touch the 78.6, and we can see a negative 27% all the way down to here. This lines up with a 127% Fibonacci extension too. And of course, we got one more level, which is the major Fibonacci projection, right? From here, all the way down, all the way up. And we have a 61.8 Fibonacci projection here. So we got 1, 2, 3. We got 1, 2, 3 reasons why price might bounce, right? So we're going to highlight this area over here. Okay, I'm going to highlight this area over here. And what we're expecting is for price to actually come down, touch this level, and bounce up minimally to this level where it kind of broke out from. Okay, and this happens way too often, right? We can actually see price come down, come down, come down. Test that level. And then it bounce up, as you can see over here. It bounce up and it kind of hit this take profit. Okay, this is one of the beauties of Fibonacci confluence, right? You find an extension, you find a retracement, you find a projection, you find an expansion, extension, right? All of it lining up together, at least 3 of them lining up together. It gives you a really good setup where you can play a small little bounce from the entry to the breakout level, the 100% where you were at. Okay, guys, you know, you can combine this with support and resistance. You can combine this with trend lines. You can also combine this with Fibonacci, right? So the key is what I call Fibonacci confluence. Try to at least find two. You can find two that lines up is great, right? So you got your Fibonacci extension, right? You got Fibonacci retracement over here. You got Fibonacci expansion, and you got Fibonacci projection. Okay. This fall, you minimally must have two. I usually like to find retracements with projections. They tend to work very well. I like to find extensions with projections too. Okay, I really like to find extensions with projections when they line up over here. 127 and the 61.8 usually works out quite well. Projections and retracements work quite well. Extensions and retracements also work out quite well. Right, and of course, extension and expansions tend to work a little bit less, right? But they can work out well. As a supporting argument, if you get expansion after having the rest, right, it's worth consideration, but I will not use it by itself, right? So I kind of put this maybe in red. Yeah. So if it's a expansion with anything else, it's not effective. But if an expansion as a supplement to the other Fibonacci's, right, it's actually a pretty good setup. Okay. Now, guys, I spent a good 40 minutes explaining Fibonacci to you guys. I'm just going to open the floor for 1 minute for anyone who has questions regarding today's webinar. Right? Does anyone have questions regarding today's webinar? Okay, so now that I'm moving away from the slides, no, from the charts. Turn on my video again. Does anyone have any questions regarding today's webinar? Right, if you know how to master Fibonacci well, it will really help you when you're finding confluence, when finding reversal. It's very effective in finding reversals, less effective in finding breakouts. Okay, now, okay, I can see that there's not many questions coming through, and I appreciate that. I hope the explanation was clear for you guys. Right, thanks for taking the time to come to today's webinar. Right, I hope you found today's session useful. Apply in your trading, whether it's any form of retrace Fibonacci. If you can use it to combine and find areas of confluence, not only with Fibonacci but with other support and resistance, with other price action levels, right, you can actually come up with a very good trading strategy. Okay, now that's it for me, guys, today. Thank you very much for staying throughout. Right, if you have no questions, end today's session. I'll catch you tomorrow for a live trading session. Stay safe, trade safe, and I'll catch you guys tomorrow and next week.